Bills are getting bigger for British consumers as inflation bites, but the biggest bill is yet to come. Brexit. €40 billion could be how much the UK government is willing to pay as part of a divorce settlement. A figure reported by a UK newspaper quoting sources close to the EU separation talks, but not so far officially confirmed.
That particular figure of 40 billion has already been denied by the government on the simple basis that no figures have actually been dealt with yet or arrived at. By the same token, of course, we had the Bank of England last week downgrading the forecast for growth for the UK on the basis of the ongoing Brexit uncertainty.
Two new surveys also sound the alarm. Mortgage lender Halifax says house price rises are at their weakest in 4 years. Payments company Visa puts consumer spending on its longest losing streak, also in 4 years, if there are still pockets of spending.
Some of the retailers have been saying of late, Next in particular, that consumer discretionary spending is moving more towards things like restaurant and bars and away from clothing. So that's just an interesting sideshow. But the overall trend, without question, is that the UK consumer is starting to show rather more caution.
At €40 billion, a final Brexit bill would be smaller than the €60 billion figure floated by the EU, though that's not to say there won't be other demands on Britain's finances. According to EU Budget Commissioner Günther Oettinger, speaking to a German newspaper, Britain will have to keep making payments for long-term EU programmes until 2020 or beyond. In other words, for 1 year after it leaves the bloc, at the very least.